Hey everyone, James Chapman. I want to bring you some quick tips on universal life insurance today. A lot of people are aware of how term insurance or whole life works. Universal life is a little bit different. I really like universal life insurance because when I'm looking to mitigate risk, and insurance is all about mitigating your risk, the main thing I'm trying to focus on is not necessarily how low or cheap we can get something, it's how I can stretch and utilize your dollar. All right, very, very important. What can you get for that same dollar amount? Universal life is great for that. Here's a couple of the quick benefits of universal life that you should consider. So universal life has a standard death benefit. That can be a steady number or an increasing number. So as you pay and go along, you can have your death benefit increase as you make payments. If it's an increasing death benefit, usually the cost is going to be a little bit higher, but always worth comparing both ways. The beauty of a universal life, what I like is death is not the only thing that you have to worry about. The other thing is long-term care. If you can't take care of yourself and somebody else needs to take care of you. That's becoming more and more of a thing, starting to see a lot more of it. Universal life, I have a product where I can endorse the policy that takes whatever your death benefit, let's say your death benefit is $150,000, okay? I can add an endorsement so it'll provide you that same $150,000 for long-term care. So if you die, $150,000. If you need long-term care, that $150,000 can start pulling out in a monthly payment for this. The great thing is the policy is not reimbursement, it's an indemnity product. So you don't have to spend the money and then get reimbursed like a lot of other long-term care products do. It'll start paying you, you use the money how you see fit. If you use only half of this, okay, so you got $75K left and you die, then the remainder will pay as the death benefit. It's fantastic. If you use all the money for long-term care and then you die, it'll still pay 10% of this number back to as a death benefit, all tax-free. The other great thing about a universal life, it's very flexible. You can overfund it. So let's just say this policy right here costs $100 a month. We can figure out what you can overfund it at. Maybe you put $200 a month in it, and it builds a higher cash value for you. So as you go along, you're building more money. Later in life, maybe you get to retirement age, and this is overfunded. Now you have $150,000 in this account. You can then start taking basically distributions out of it. That's considered a loan, which is tax-free. Anything you can take tax-free, always a great advantage. So literally you can take one universal life policy, make it a death benefit, long-term care, help you prepare for retirement, and the benefits are tax-free. Not many products do that for you. That's why I absolutely love universal life, and I think it's worth you having a conversation with your insurance professional. If I can be of assistance, please feel free to reach out to me. It's James Chapman, Chapman Insurance Group. You can find us online at chapmaninsurancegRP.com. Thank you.